Welcome to this episode of our property investing channel, where we bring you practical tips and strategies to help you maximize your profit and reduce your risk in your property investing journey. This is your host, Amir Sehat, and today we're going to talk about risk management for property investors. Our guest today is Oscar Doren, partner and a specialist financial planner at IndexWealth with extensive experience in risk management. So without further ado, I'd like to welcome Oscar to our show. Oscar, thank you very much for being here.
Thank you, Amir. Thank you for having me.
My pleasure, mate. So to start off, could you please share a bit about your experience and journey?
Yeah, sure. So I guess for me, I wouldn't say I've got an exciting story where it's a motivational one. But I think for me, it was about, early on, your parents kind of ask you, like, what do you want to be? No idea, but there's a few things I knew. One thing I knew, I was good with numbers. I liked helping people. And I liked dealing with people too. So that's what I knew. And, I've always had like a mindset of, I was always quite successful in schooling, in university, like with scholarships, then in university. I studied Bachelor of Commerce, Bachelor of Economics.
Beautiful.
And from there, I was like, I kind of finished and I was like, okay, started looking for work. And, when you first come out of schooling, it's a bit harder. And I was a bit fortunate. I had a university friend who was in the industry, and he said, hey, look, why don't you join in? And I started more doing like a role where it was more strategy for planners. And about 9 months in, I said, you know what, look, I really want to be, speaking to people, being the one helping them, at a face value and in the background. So 9 months later, I got into it. I was about 25 years old. And just to give you a bit of perspective, the industry average age was about 60. Mm-hmm. So when I go to these events, it was like, wow, I'm a bit too young here. So I think I went with the mindset of, I said to myself, look, I want to go with the mindset of I don't know anything. And for 1 year, I was the person that would contact people, ask a lot of questions. And I think after a year, somehow I became the person where everyone was coming to for questions. So I think by age 26, 27, I pretty much knew a lot about risk management. And from there, now it's been almost a decade, and I think helped over 1,000 people in this area now. And here we are, I'm fortunate enough to be part of your podcast today.
It is our pleasure, mate, to have you on our show. A fantastic story. It was very exciting with your background and your knowledge. I'm sure that we're going to have a fantastic session today. So just to start with, could you explain what risk management is and why it is crucial in the realm of property investments?
I think, look, most people have a goal, and most of the time their goal is they want to get wealthy. And I think people like yourself and as financial planners, we identify, what that means. So we help people, with investments, and I guess property is a very important tool to invest as well. And everyone's thinking about the growth side, which is good. And that's what we're really after. But I think most people tend to forget, all right, well, what do we do if things don't go to plan? What is the backup? And that is where we need to think about what do we do in that scenario. So I wouldn't say it's as pleasant as the growth side of things, where you're getting excited, going, yes, this is where I want to get to. But it's a very important conversation to have, especially when you really think about it. A lot of assumptions are made with the idea of income coming in. And as you can imagine, we're planning everything based on that. And the way we want to, I guess, grow our wealth and accelerate it through property, it's all, again, dependent on income. And it's like, all right, well, what do we do, if that stops?
Exactly.
Just to give it a perspective, yeah. So I think, it's the main, just to sum that up, I think it's really discussing the backup plan. That's what risk management really is.
Beautiful. So we have a plan to create wealth and then a plan to protect it. I think
Exactly. Perfect.
yeah, beautiful. So how does a financial advisor assist property investors in safeguarding their investments?
I think what financial advisors really do is they look into someone's circumstance and really think about, the things that could go wrong. And they consider, I guess they think about strategies that's going to be effective to that person. Like you might have someone, with multiple properties, they'll have different strategies, mainly because they may have equity or they could protect themselves to a degree possibly. Or it might be someone who's a newer investor and they might not have any protection. And I guess an advisor looks at all the things that could go wrong, and what we want to do is go, okay, if something goes wrong, what is the logical steps that we follow? So we kind of get rid of all the hopeful thinking of this is going to be this, like, just hope for the best. Is no, this is exactly what we're going to do. So if you speak to a good advisor, they'll actually think about the best strategy for their clients.
Make absolute sense. So in your opinion, how can property investors protect their assets at the end of the day?
I guess one thing they can, I think the first step they need to do is they need to think about, if something goes wrong, what do they do? And I think the answer will come eventually and say, okay, look, I can protect myself for about, I'd say 3 months. But after that, then it becomes about, okay, well, what do I do beyond that? And especially as a property investor, like I said, because a lot of the assumption is based on an income coming in, that's where, if that stops, like, what do you do? So I think what most people can do is they can consider things like, income protection. And what income protection really is that it's something that gives you like an ongoing income, right? So you're getting, I guess, when you go to work, you get that income. And I guess this is the replacement for it. And it generally covers you for things like injuries and illnesses where you can't go back to your own occupation. And it's more for things you can't control. Okay. And then I'd say there's just covers like disability cover where, I guess if you're disabled, that's where most people want to cover like their debts, or cover their home. They might want to cover their properties. So that's more covering like the serious stuff. And I'd say life cover is slightly different. That one's more for things like, if you pass away, do you want to deal with mortgages? Do you want to pay off properties, and leave your family, I guess, debt-free? So that way, the vision that you had for them, do you still want to be able to facilitate that when you're not here? And yeah, there's one more trauma. That's more, I'd say, is just to protect you more for emergency things. But I'd say that's the main idea behind it. Like these covers are there for, like, you got that vision of yourself being somewhere. And this is just saying that, even if you can't do it, well, even if something goes wrong with your health, you still get there. That's what they do.
Very interesting. So basically all these products try to protect the income and the person in different ways and shapes. So if anything happens to them, they're protected.
And think about it this way, Amir, like, for example, like your income, say you're earning $100,000, right? And say, you couldn't work today, right? And let's assume you got another 30 years of work in you. Assuming that you're going to earn 100 grand a year, which is you expect that to increase over time, of course. Just give you just a quick calculation. Say 30 years times that by 100 grand, that's $3 million. So if you lose $3 million, like, that's quite significant. And think about it, like a lot of people, they go, they study, go through the hard yards, and they get into an industry, and then not be able to work and not get that income impacts your I guess your future in terms of wealth, in terms of your lifestyle, and then all the dreams that you had, like, it gets impacted. So I'd say that, just giving you that number, I'd say income is your most valuable asset overall. And without income, how do you invest into property?
Exactly. So it is impossible to invest if you don't have any money. And as you
Exactly.
said, your income is the biggest asset that you have, and you need to protect it first and then grow your wealth by investing.
Yeah, and yeah, like yeah, pretty much. That's the best way to put it, Amir.
Okay, interesting. So are there common misconceptions or mistakes you've observed among property investors when it comes to risk management and insurance?
Yeah, I think a lot of people tend to like I do speak to a lot of clients, and I've seen a lot of different scenarios. A lot of the time, most people will have covers in their superannuation. And I guess the biggest misconception I see is that they think what they have is good. Which I guess when you look into the further detail and you go through
They
the
always
advice
say, I have a
process,
cover. It is in my
yes,
super.
I've got cover. It's in my super. It's good. And then once we go through the advice process and they actually see the actual quality, because we do generate independent reports to compare it, they kind of go, "Oh wow, I didn't know that." Or when you look at it from a like for like, from a premium point of view, what they're actually paying is actually quite high. That's another misconception. They think that the amounts they have is enough. Like a lot of the time when you look at a statement, you'll see that they've got 100 grand worth of disability cover, and I asked them that question, like, if you're disabled, say your mortgage is 500 grand, what's the 100 grand going to do? Or they got no income cover. So I think the biggest misconception is people thinking they've got enough, it's good cover, it's reliable, and that they've done it the right way. Because there's times where insurers don't pay out as well, because there's a lot of terms and conditions, and that's where we help clients with the claims process too.
So let's paint a picture. Imagine someone has just made a significant investment in a property. What could be the potential financial repercussions if they were to suddenly face a traumatic event or disability without any protective measure in place?
Okay, Amir, let me just give you two scenarios, and I think that will pretty much paint the picture clearly to yourself and to the listeners. All right, let's assume they bought a property, right? Spoke to Amir, helped you out, you got no cover in place, right? And then 6 months later, I don't know, God forbid, cancer comes along, right? Doctor says, you know what? I don't want you to work. You need to focus on your health. And you can't, he says you don't go to work. Say you've got savings, 10 grand, that lasts 3 months. Then what happens? What do you do? So as you can imagine, then you're in a position where you say, oof, Amir, I'm going to have to sell this property because I'm in a difficult situation. But then the strategy that you had for Amir was, this property is probably, say, a 3-year investment, or it's 5 or 10, whatever that investment is. And now you're forced to make a decision. And now you're in a position where you want to grow your wealth, but you're going to have to sell this thing when you don't want to. It could be the bad timing in the market. You're going to have to pay for sales costs, the government's costs. So that's where it impacts your situation, where you're like, oh no. But then you got to think, okay, well, that's just from property, but then what about my lifestyle as well? So as you can imagine, the repercussions just roll on. Whereas if we give a scenario, say in the scenario, well, hey, you spoke to an advisor and he recommended for you to get, certain covers, right? Doctor says, you know what, person X, you've got cancer. First thing you can do is claim on trauma cover, right? You cover your emergency costs. Then you might have income protection, where they'll say the waiting period is 90 days. Then you start getting paid every month, right? So now that you're getting paid, you can maintain your lifestyle. And the property that you have, are you forced to sell it? Not really. You can still maintain everything, right? Now, and those income protection contracts last till you're 65 years old. So you can pretty much maintain everything. And if you want to financially continue to grow, that's still possible, right? But then you're going to say, well, if then, say, for example, your health got worse and you're considered as disabled, right? And that's where the disability cover, TPD, usually comes into play. And most of the time, people want to cover their debts. So that way, if you're disabled, what you can do is you just pay off your house, and pretty much you got that income still coming in, right? And as you can imagine, if you're here, then everything's still protected and everything's still going in that direction that you want, right? Even if you pass away, right, and you got life cover, that's where you pay off your properties or your debts, and you feel like I said, your family still achieves the vision that you wanted. So just to I guess sum that up, like one of them is no cover, as you can see, is quite detrimental the moment something goes wrong, and the other is, you're still going to be able to achieve all the things you want to achieve. And don't get me wrong, I'm not saying like you have, insurance you have to get no matter what at all costs. It's about getting the right amount with the right balance.
Wow, that was a amazing picture, which really makes everyone think about the situation and how suddenly things can change very, very quickly. And we normally don't expect it, but things happen.
Unfortunately, yes.
That was a very good example, Oscar. Thank you for painting that clear picture for the audience. You mentioned about a lot of important factors and facts about insurance, but what would be your key message about the importance of protecting assets?
I'd say the most important message is to remember why you're investing. You're investing to accelerate your growth and get to better positions in life, and that's where you want to get to. And if something goes wrong, like I said, you still want to get there. Ultimately that is your goal. And if you want to get there no matter what, I think risk management is extremely important to consider. So that way, like that example showed, you still get there. And I'd highly recommend that you speak to someone about it, so that way you've got the right protection in place. Look, I've heard so many stories about things happening to people. I do have people in the industry that actually have suffered through and they benefited from it. And and I can see the ones that didn't have the protection in place and the ones that did. And I'd say that, look, speak to someone, and so that way you've got the right strategy in place.
Thank you so much, Oscar, for being here today. The session was extremely informative. I really appreciate you.
Thank you, Amir. Thanks for having me.
So if you've liked what you've heard today, please like our channel and leave us a comment. And on that note, this episode is a wrap. We'll see you guys again very soon. Bye for now.